Thank you for joining me. I'm Alexandra, and I want to talk about Twitter. Now, what they do can be very generously described as social media. They really don't do anything else. Stock price $68, which gives them a market cap of $54.4 billion. Total revenue $3.7 billion, which is slightly up from the previous year, so not really the growth they're used to. Earnings negative $1.1 billion, which is also slightly less than what they're used to. And that gives them a PE of negative 47 with a forward PE of 60, which pretty high, but not really terrible. If they could get the growth back going again that they had, that PE of 60 would be justified. Not sure if the tiny growth they had last year justifies a PE of 60. Dividend is 0. I don't expect that to change, especially not anytime soon. Total assets $13.4 billion, total liabilities $5.4 billion, which gives them a total stockholders' equity of $8 billion, and that is a nice balance sheet. Risk factors, a decent programmer could program a clone to Twitter in half an afternoon, so that's obviously always a problem. I don't really see many other companies trying to get into this. The whole limiting things to 140 characters, not 280, but the 280 is completely arbitrary. The 140 characters used to be so you could just text a tweet, but texts also don't have limits anymore. So overall, I don't really expect any company to try and rival Twitter unless, again, Chinese companies want to get more global, which might happen, but probably also not anytime soon. So overall, for a growth investor, current growth is kind of a problem. If they can get back to the growth that they used to have, then I think it would be an interesting company. So you're going to have to dig deeper and kind of try to make your own, draw your own conclusions there. For a dividend investor, there's obviously nothing here at all. For a value investor, the balance sheet is really nice. Assets to liabilities ratio of almost 3 is very good. The PE is slightly high. I'm not sure if they can get back to growth, so you're going to have to also do some digging. Overall, I'm not a fan here because of the high PE, because they just randomly make $1 billion loss in a year, and because I don't really think that this company is stable enough for a value investor. But balance sheet looks good, so there's that. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.